There isn't a single stock that stayed overvalued through its entire life, ever.
Mm.
No,
Yeah,
I can't think
that's
of a single one. I valued Amazon every year since 1997. And we're picking the very top end of stocks now, right? You pick the Amazons, you think the Googles, you think the Facebooks, the big winners. And each of those stocks had multiple points, not just one point, multiple points at which you could have bought and bought those stocks.
mm,
I mean, I bought Amazon 5 times in the last 26 years. I've sold it 4 times in the last 26 years. Why one less? Because I'm owning it right now. But that's because I track the company, I have my story for the company, I have my investment and valuation for the company, and the market does whatever it does. It's not in my control. And that's why I tell people don't get frustrated with what the market is doing. It's going to do what it does. And it's in fact because the market is so volatile and unpredictable that you're going to get your chances.
mm,
So while you complain about it doing crazy things on NVIDIA on the upside, prepare for it to do crazy things on the downside, and there's your chance.
yeah,
So I know it's difficult to be patient. And that's why I said you got to start by accepting that investing is about preserving and growing your wealth. Because the minute you say it's about getting rich, you can tell me as much as you want that you're going to be patient, but you will not be,
yeah.
right? Because you need to get there in a hurry. You need to pick the next winner. You put the weight of the world on your shoulders. And when you do that, you're going to make some bad choices because you're essentially treating the market as the equivalent of a casino.
Mm.
You got to hit that number or it's not going to pay off.
So we've just spoken about the Magnificent Seven, which is capturing everyone's attention at the moment, it seems. So let's turn away from that. Is there any part of the market that you believe people aren't paying enough attention to that perhaps you're looking at and getting excited about, but you think the rest of the market hasn't caught up with you?
I think every part of the market has a clientele, people who pay. And I look at utilities. You say nobody pays. There are actually people who live in that space. That's all they do. In fact, the problem here is people get tunnel vision because they get so focused on a segment of the market. And then they come to believe that the rest of the world is unfair to that segment, whether it's real estate or utilities or energy. And I think that's dangerous. I think one of the things we need to do is step back and gain perspective, look at the broad market. And right now the broad market is priced well. It's not overly rich. In fact, I compute an equity risk premium for the entire market, but much of that pricing is coming from this top tier of companies. If you remove them from the mix, the market actually looks much more modestly priced. The big companies, and because of the market cap, they have a disproportionate weight, are carrying the market to heights. But I think the rest of the market, if you break it down, is reflecting very much what you'd expect to see in a world with 4% interest rates and growth that looks reasonably good now that people are not as worried about recession.
On the macro side of things, you can't make a finance podcast in 2024 without talking about inflation and interest rates. So we'll ask that customary question. And I guess in particular for the context of our conversation around valuation, how do you factor in the conversation around inflation, interest rates, and I guess monetary policy into your thinking around valuation?
I try not to because, in a sense, there's nothing I can do about it. And I think, again, in investing in valuation, we spend so much time worrying about things. I call it taking the karmic pose. There are things you don't control in investing. Worrying about them is not going to make them go away. It is true, inflation has been a clear and present player in this game for the last 3 years. And the reason it's so shocking for people is we spent a decade with low and stable inflation. If you look at the history of inflation in the last 200 years, the last 10 years were the aberration. So rather than think about these as being abnormal times, maybe we need to recognize that the last decade leading in were the abnormal times. We're reverting back to a more normal time. But since we're spoiled, we're lazy, we're sloppy because of that decade, it's taking us a while to catch up. So we're in better shape with inflation than we were a year ago. But the problem with inflation is it's incredibly stubborn. It's very difficult. I called it a genie in the bottle in 2021 when I wrote about it. I said, look, there's a genie in the bottle, it wants to get out. So even if you think inflation is transitory, treat it as permanent, fix it quickly because once you let it out of the bottle, getting it back in is going to be difficult. But at that time, the Fed didn't want to do anything. They talked about this being supply chains and COVID, and then it was too late. Inflation was out of the bottle. I think at this stage it's still out of the bottle. It's maybe halfway squeezed in, but it can change its mind.